Hey, what's up, everybody, and welcome to my screen. Like I said earlier, today I'm going to be showing you guys how to do a top-down analysis. Basically, how to analyze the market like a professional, how to analyze the market like the big boys that work for the institutional banks, and basically how you can analyze the market like people like somebody who's been trading the market for the past 10 to 15 years, like I've been doing myself. Actually, I've been trading this market for about 8 years. So welcome. I'm going to be showing you guys how to do some really cool analysis and basically how you can profit off of this very decent analysis. Now guys, I want you to sit back, relax, and enjoy yourself. It's not anything too complex. I'm going to be using tools that I always speak about on my channel: support, resistance, Fibonacci, and stuff like that. So just sit back and relax, okay? And yeah, so it's a weekend here, and I'm pretty much just chilling, just relax. Although I'm on my computer shooting this video for you guys right about now, but you know I love you guys so much, so I always feel the need to come on here and give you guys some really valuable content. But before I proceed, I want you guys to, once again, if you haven't already smashed the subscribe button, go ahead and do that. It's gonna really help my channel grow. But most importantly, whenever it is I release a video, you guys will be notified as well. Smash the subscribe button below and smash the like button. And you can also drop me a comment below telling me about a video, rather a topic that you're struggling with that you want me to do a video on. And not only will I reply to the comment, I will also be doing a video just for you, and I'll be uploading it here and I'll be tagging you so that you can feel part of the community. Alright guys, so like I said earlier, we're going to be learning how to do a top-down analysis. Now basically, what's a top-down analysis? A top-down analysis is basically when you analyze from a higher time frame all the way down to a lower time frame. This helps you basically execute more profitable trades on a lower time frame, because don't forget, the market and a lot of the institutional traders always come on higher time frames to analyze their trades. The market tends to respond to higher time frame levels a lot better than lower time frame levels. Now what do I mean by level? I mean support and resistance are more reliable on higher time frames than lower time frames. So you do want to come and always start from a higher time frame with your analysis. Now I know a lot of people do not really like coming on higher time frames, but you just can't run away from it, okay? You just can't run away from it. Time frames are very analyzing on higher time frames are very important. So all right guys, I'm going to proceed to start this analysis with you guys. Just give me a moment. Okay, cool. Now the first thing you want to do, like I said, is you want to, so for instance, we're looking at GBP USD today. We're going to be looking at GBP USD, we're going to be looking at gold. Now I'm going to be analyzing these pairs right from top to bottom, all the way up to even finding out the most immediate trades that we can be placing. Okay, so just vibe with me. So the first thing we're going to do is we're going to come and we're going to start looking at this market from the highest time frame, which is the monthly time frame, right? And I'll be explaining to you guys what I do on each and every one of these time frames. And on the monthly time frame, and you might want to write this down now, on the monthly time frame, what I like to do personally, right, excuse me, what I like to do on the monthly time frame is I like to come on the monthly time frame to basically analyze candlestick patterns. Now you guys already know about candlestick patterns, but you use candlestick patterns in the wrong way. I only use candlestick patterns on a monthly time frame, okay? And from what I can see, let me just zoom in a little bit more now guys. Another very important question that a lot of people ask me is, what part of the market should they be analyzing? Well, once you come on the monthly time frame, you want to be looking at least from 3 to 4 years ago. You just want to see what exactly is happening, and by virtue of what is happening, I can tell that GBP USD is in an overall downtrend, right? We're in an overall downtrend. But before I get into the trending aspect of things, I just want to basically explain to you guys what I do with the monthly time frame. Like I was saying earlier, I always like to come and look out for candlestick patterns. Now, if you look very closely at the moment, GBP USD is, you know, putting in what they call a morning star formation, right? Just about here. So you have the bearish engulfing candle and then you have this indecision candle, and then you have this bullish candle, and then followed by a very bullish engulfing candle. So this particular scenario is known as a morning star. Okay, so it's a morning star reversal all the way to the upside. It's a bullish reversal. So anyway you see a formation like this, just know that the market wants to reverse all the way back to the upside. Now that's strike one. Okay, strike two basically is that this formation came and happened at a major level right about here. Now guys, you can see how I'm just taking my time to just basically look at the clues, just to basically understand what is happening. So you can see how the market came and did this reversal at a very major level, right? And yes, that has happened. And another thing I've been able to identify is that the market has come and tested this level once, and it has tested it again. This is technically a double bottom. Now guys, one thing I do know for a fact is that whenever it is you see chart patterns meaning double tops, double bottoms, head and shoulders, inverse head and shoulders and stuff like that, anytime you see it form on a very big time frame, monthly and weekly, you have to take it very seriously. Okay, you have to take it very. So all I'm trying to say in essence is that there's a very high chance that GBP USD is going to reverse out of here to the upside. Okay, and this is because obviously we can see some form of a double bottom forming on GBP USD at the moment on a monthly time frame. Now that being said, however, GBP USD already prior to now, over the last 4 to 5 years, we've been trending downwards. Okay, we're making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and technically we were supposed to come in and put in a lower high, lower low, sorry, somewhere around here. However, we've come to this 100% retracement and the market has failed to break lower. Okay, so technically GBP USD is no longer respecting structure. The market has failed to make a lower low. As you can see, this market has always made lower lows for the last 3 to 4 years, if not 5 years. Yes, the market has always made lower lows, but for some strange reason the market has failed to do so. Not only has it failed to do so, we have also reversed to the upside by showing what they call a double bottom. So at this point I have a pretty decent picture. Although the overall bias, the major bias for this trend is so bearish, but we have hit what they call a major support level, like we've run into trouble basically. So at this point, what I can say for a fact is based on this monthly candles that I'm looking at right now, GBP USD is going to rally for a couple of months. Okay, so what I like to do here is that don't forget that these candles are all monthly candles, right? So if you see this kind of formation, be rest assured that this market is going to rally for its next candle. Okay, so I have bearish candle, indecision, bullish candle. This 1 2 3 pattern is a morning star. After a morning star comes another bullish candle. So if I know that after a morning star comes a bullish candle, that means, and the next candle, and I'm trading on a monthly time frame, so that what that basically means, what that basically says to me is that the next month is going to be a bullish month. Now this is exactly what I'm trying to stress. If I see a morning star on a monthly time frame, okay, and we know that after this 3 candle formation comes another bullish candle, okay, and we're trading on a monthly time frame whereby each candle represents a whole month. So all this says to me is that the next trading month is going to be bullish. So when I scroll to a lower time frame, I'm not going to be looking for sell opportunities, I'm going to be looking for buy opportunities, because the monthly time frame has pretty much told me that it has formed a morning star at major support, and we're expecting the 4th candle. And since it's a morning star, the next candle after a morning star is usually always bullish. So technically we're going to have a bullish month of, so currently this is October, we're going to have a bullish month of October. So now when I scroll over to a lower time frame, the only thing I'm going to be thinking about is buy opportunities. Okay, buy opportunities. So That's the first point I want to establish just by looking at the monthly time frame. It's very simple and very straightforward. I'll take that again. What I do on the monthly time frame is I always come to look out for candlestick patterns. In fact, I don't even try to look out for support or resistance, just candlestick patterns. What have the previous 2 months said? What have they said? What have they done? Was it bullish? Was it bearish? Right now I can see a reversal to the upside. So with that in mind, I can now scroll over to a weekly time frame to see, you know, in detail what exactly is happening. Okay, so at this point I'm going to move over to a monthly time frame. Always ensure to zoom out. This video might be a bit longer than the rest of the other videos, but I just hope I'll be able to get my point across to you guys. So now that I'm on the weekly time frame, I can see in more detail what exactly is happening on the chart. So on a monthly time frame is where I actually come out to look for reversal patterns on the chart. Double bottoms, double tops, head and shoulders, and inverse head and shoulders, and potentially patterns on potentially massive patterns. Don't forget, monthly time frames are for candlestick patterns. Weekly time frames are for chart patterns, right? So, and on this time frame, I've basically been able to identify, obviously, what we identified on the monthly time frame. I can see a very clear double bottom that has formed, right? And for the fact that a massive double bottom has formed on a weekly time frame, this just basically says to me that we might be retracing back to the upside. Okay, we might, although the overall trend is looking very, very bearish. As you can see, all these swings are pointing lower, all these swings are pointing lower. However, we have hit some form of support here, and what this is basically saying to me is that GBP USD might not necessarily be reversing all the way to the upside, but we, at least for the next 1 to 2 months, we might see some correction back to the upside. Okay, are you guys understanding where I'm coming from? I hope so. So now that I've been able to establish this, that we have a double bottom, not necessarily to say we're going to reverse, like I said earlier, not necessarily saying we're going to reverse, but what this is basically saying to me is that for the next couple of weeks, we're going to be having buy opportunities. Sorry guys, I can hear, you know, the birds are just squeaking. I have no idea why. It's a nice weekend. The sun is out, so yeah, you can't really blame them now, can you? Great. So on a weekly time frame, I've been able to establish that this is a double bottom, and that has been said. Now the next thing I'm going to do is I'm going to try and plot out my major levels. So first things first, the monthly time frame, you identify candlestick pattern. Next thing is you want to identify come to a weekly time frame to basically identify a chart pattern, which we have done so far. And now the third thing is we want to plot our levels, but we fail to analyze one thing. Where is this market going? Was the market trending upwards or downwards? Now overall, this market is trending downwards, because as you can see, this market is trending all the way to the downside. However, like I said earlier, we have hit some form of support that is affecting us, you know, that is affecting this market from dropping lower. So at this point, overall bearish, temporarily bullish. This is where a lot of traders usually get it all confused. You can be overall bullish, sorry, you can be overall bearish, meaning overall your bias is down, but temporarily we can have a bullish momentum, just basically a retracement before we continue heading lower. So the bias, overall bias, is bearish, as you can see, lower lows and lower highs, lower lows and lower highs. However, we have hit major support, and you know, the market is pointing to the upside. Monthly candlesticks have told me that we formed the morning star and we're looking upwards. So it's possible that the overall trend is bearish. However, we have some form of temporary bullish momentum. So based on this is exactly what I'm going to be trading. Now, back to what I was saying. The next thing I'm going to be doing is I'm going to be looking for ways to plot my support and resistance. Now, you might want to check my other videos. I know what I'm going to do after this video. I'm going to suggest the support and resistance videos in my next video. So just watch to the end of this video where I speak about how you go about plotting your support and resistance. And I'm also going to be suggesting another video that helps you understand different time zone trading, okay, different time frame trading. So I'm going to be suggesting that at the end of this video. Okay guys, so back to what I was saying. Now I'm going to go ahead and plot all my levels. If you want to know more as to how I do this, you might have to watch the video that I recommended. Okay, so let me go ahead and plot my levels. I already know where my major levels are based on my strategy that I use to plot my levels. And yeah, I got everything ready now. Perfect. Now I have all my levels ready. Now I've done monthly, I've done weekly. Okay, monthly, weekly. Now I can scroll over to my daily time frame. I can scroll over to my daily time frame. Okay, just expand this a little bit more. Now on my daily time frame, as you can see, remember, like I was saying, we are currently bullish at the moment. I just need to basically reduce the width of these candles. Pardon me, not the width of the candles. I need to reduce the width of my support and resistance because I don't really like it too thick. It just messes up a lot of things. Okay, so just basically want to reduce this, reduce this, reduce this, and come back to a daily time frame. Okay, I think I prefer it this way. Let's just expand this, right, and good. So you can see how my charts are looking very, very clean, very clean and very nice. So basically, guys, like I said to you guys, now the overall trend is bearish. However, the monthly has told me that we've hit a double bottom. We have indeed hit a double bottom, and we have formed a morning star at the double bottom, which is major support. I come down to the weekly time frame, and the weekly time frame has told me that yes, indeed, it's a double bottom because weeklies are for chart patterns. And all of this has basically said to me that okay, overall we're bearish, temporarily we're bullish. So when I come to a lower time frame like the daily time frame, I'm only going to be looking for buy opportunities at this point. Now the market has actually started respecting this, as you can see. However, we have run into major resistance. Based on the levels that I've just plotted, we've run into major resistance. Now, what am I going to do at this point? I'm also going to try and see if I can draw a trend line on the daily time frame. As you can see, this market was trending lower, okay, making lower lows, lower highs, lower lows and lower highs. We made a lower high about here, but we failed to make a lower high. We failed to make a lower low, basically. So I'll take that again. Lower low, lower high. Lower low, lower high, lower low, lower high. Oh, sorry, we made lower low, lower high, equal lows. Now I'm just going to zoom this in. Right now, it was because of this double bottom. Now this market is actually a very funny market, right? It's very funny because it tells you exactly what it wants to do next. A lot of people just choose to ignore a lot of the signs the market is doing. The market has told me that although I'm bearish, but I've shown you a morning star on the monthly. Although I'm bearish, I've showed you a double bottom on the weekly. Although I'm bearish, okay, although I'm bearish, I've showed you that even on a daily time frame, I was trending and making lower lows and lower highs, lower lows and lower highs, lower lows, lower highs. Even on a daily time frame, I have made a double bottom, a small double bottom, and I have fired out of that level to break structure. Okay, guys, don't forget that this is structure that has been taken out. The market was making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and we came and broke above the previous lower highs and have made higher highs. Now this is a change in structure, right? And you know, on every time frame, this market has told me that it wants to change its trend. Okay, give me a second, guys. Now, truth be told, that's exactly what now started to happen. The market now actually started to reverse all the way, you know, to the upside. As you can see, I actually did catch this move to the upside. Now, I have this little strategy that I have with me that I always like to use. The strategy goes is very basic and very simple. Once market starts to break structure, right? So we have this bottom, we fail to make new lower lows, we have a double bottom. Once we're able to break above the previous highs and form new higher highs, once we pull back, chances are that we're usually going to pull back into Fibonacci support. As you can see, we pull back into between the 50 and the 61.8, and the market just rallied all the way to the upside. And guys, guess what? Because I had already plotted these levels, because I already have these levels plotted, I took out my profit just at this resistance, and you can see how easy it was for me to plot the resistance. Like I said earlier, guys, if you want to learn how to plot support and resistance levels, check one of my videos. I should definitely be dropping a link, but if not, just search on my channel. You should definitely see how to plot these levels. Very easy and straightforward. Now guys, moving forward, if we're able to take out this level, now guys, if we're able to take out this level, and that's the good thing about support and resistance, once we're able to take out this level, the next level target for this market is here. So we're going to expect to see something like this, a breakout, pop up, pull back, and then we're going to expect to see something like this as long as we break this level. But guys, ladies and gentlemen, if we stay below this resistance, chances are that we're gonna stall here for a little bit and then drop all the way back to this support level. Now guys, like I keep saying, the markets always move from one support level to another support level, from one area of major liquidity to another area of major liquidity. Like you can see, we have drafted all the way from this area of major liquidity all the way to this area of major liquidity. If we break this level of major liquidity, we're going to move from here to here. And like I said, if you want to learn how to go about plotting these levels of major liquidity, I suggest you check out my video on support and resistance, how to profit from support and resistance. I believe that's the name, that's the title of that video. So ladies and gentlemen, this is exactly how you go about let me just zoom out. This is exactly how you go about doing a top-down analysis. As you can see, it's very easy and very straightforward. Now, I really wanted to analyze another pair. I don't know if I have enough time. This video is already looking quite long. Should I not? Okay, let's take another one. Okay, we're gonna quickly wrap up gold. Okay, gold. A lot of you guys are always scared of trading gold. So now, like the strategy goes, or rather like the principle goes, we must start off from the monthly time frame. Now for some reason on this monthly time frame, I can see, just by zooming out on the monthly time frame, I can see something quite interesting. I can see something like a left shoulder, I can see something like a right shoulder, and I can see something like a head. Okay, so what this is basically saying to me is that this market has actually put in an inverse head and shoulder. We have put in an inverse head and shoulder, so that's the first thing I want to identify. Second thing I want to identify on the monthly time frame is that this market, now guys, you have to understand that just come on the monthly time frame just to get a feel, get a vibe, get a feel of what exactly is happening. Like, you know, the market isn't always, not every single instrument is going to show you this kind of very lovely trend on the monthly time frame. But I mean, if it's showing you, why don't you just use it to your advantage, right? Okay, so like I said, on the monthly time frame, I always try and look out for candlestick patterns on the monthly time frame, and I can see that 1 2 3 1 2 3 4. Let me just zoom this in so that you guys can see. Right, let me just zoom this in right now. 1 2 3 4 have been absolutely very bearish. Hey guys, so the second pair I'm going to be going over today is actually gold. So this is going to be the second pair. Hey guys, so the second pair I'm going to be going over today is actually gold. So I'm going to be doing a top-down analysis on gold, a bit similar to what we saw on GBP USD. And yeah, so the same principles basically apply. So if you're ready, let's kick it off. All right, so first things first, remember the first rule is that we must come on a monthly time frame first. This is top-down analysis. This is price action secrets. This is how the institutional traders look at the market. They must always come on the monthly time frame first. So like I said, what do we do on the monthly time frame? What we do on the monthly time frame, first of all, is we come and analyze the 3 previous monthly candles, right? 1 2 3. So just by even maybe the fourth month before that. So what I can see in front of me here is actually we've had a breakout on the monthly time frame, and the market broke out, had an indecision candle, but it was followed by another bullish engulfing candle. The month before this one was actually a bearish candle, but from what I can see, this monthly candle is pretty much just a retracement from this one. Okay, this seems to be, well, I would still favor the upside. If you ask me, just by looking at the monthly candle. And another thing is, this might just be happening because the market is just trying to catch its breath and stuff like that. So there's possibly some form of minor resistance on a lower time frame, and that's exactly why the monthly price action is just halting at the moment. But I'm still favoring the upside for this. However, we're going to be scrolling over to a lower time frame to see exactly what is happening. But gold at the moment is looking quite bullish. Okay, the monthly time frame isn't really giving me that much. The monthly candlestick pattern isn't really giving me that much information, but that's all right, that's fine. So another thing I'm going to do is I'm going to zoom out on the monthly time frame just to see what exactly is happening, and lo and behold, I can see a lot of information on the monthly time frame. The problem is that a lot of you guys don't like coming on the monthly time frame, like I explained earlier. But from what I can see on the monthly time frame, guys, I can see a very huge push to the upside. I can see a push to the upside, and I can see a pullback. Okay, and I can see another push to the upside. So what I'm basically seeing here is this market has pushed all the way to the upside, and we have pulled back into Fibonacci region. Exactly what I said. This market has pushed all the way to the upside. We've pulled back into Fibonacci region, and this market is looking like it wants to continue heading higher. Okay, for the fact that we've made higher highs, higher lows, higher highs, higher lows, chances are that we're going to come and make at least equal highs. Maybe not higher highs, but at least equal highs. Just by that brief analysis, just looking at the trend, making higher highs and higher lows, I can already tell you for free, for a fact, that guys, the overall target for gold is here. I'll take that again. Just by that clue, just for the fact that we're making higher highs and higher lows, higher highs and higher lows, if we continue with this momentum, gold is definitely going to come into previous highs at about $1,800 per ounce. And if we take out this level, we're definitely going to come and make newer higher highs, or new highs, or overall highs, whatever you guys want to call it. So just by looking at the monthly time frame, in less than 2 minutes, just by looking at the monthly time frame, I can tell you that this market wants to push, higher, and we're gonna come and make new highs at $1,800 per ounce. So guys, you can see how your trading doesn't need to be complex. You don't need to stress yourself that much. You just need to look. Just zoom out and look. Zoom out and look. Now, the next thing I also am able to identify on the monthly time frame is the fact that the market has actually put in, okay, what we call an inverse head and shoulder. Okay, so I can see, from what I can see here, I can see a left shoulder, I can see a head, and I can see a right shoulder. Okay, and for those of you who are familiar with chart patterns, right, you can tell that this market was ranging and formed this inverse head and shoulder. We have broken out of this head and shoulder pattern, and this market has started pointing to the upside. Now, one of the rules of a head and shoulder is this, okay, or rather a chart pattern, is basically the amount of pips that was accumulated during a consolidation phase. I'll take that again. The amount of pips that was accumulated during the consolidation phase is the same amount of pips this market is going to climb, is going to accumulate once we have a breakout. Okay, so all this is saying to me is that this market has accumulated. As you can see, I've drawn this nice black line just to calculate the amount of pips from the neckline to the head of this consolidation phase. All I'm simply going to do is add it to the neckline, as you can see right about here. And as you can see, this market is this price, the number of pips that the market is supposed to blow out into is pretty much lining up with resistance. It's pretty much lining up with the previous resistance. So this is basically saying to me that we might have some form of resistance about at this point. We might obviously be coming to this level and resist. And I like situations whereby two or more tools come together to give me a more definite level. As you can see, I'd already put this green bar at here. I was expecting gold to come up into this level as per higher highs, higher lows, higher highs, higher lows. I'm probably coming to make equal highs. I just put this green level here, and truth be told, as I calculated the range breakout for the inverse head and shoulder using this line that I've done, so as I added it to the neckline, which is obviously the strategy, as I've added it to the neckline, you can see how the market pretty much my analysis is pretty much coming together around this region, so around the $1,800 per ounce region. So all of this, just by looking at this, I haven't put on any indicators, just by looking at the chart and understanding price action, I've been able to identify that gold, like I can literally go anywhere. I can go on CNBC, I can go on Bloomberg. Just by a 5-minute analysis, I can tell you that gold, if it continues at this momentum, if it continues making higher highs and higher lows, we're going to hit $1,800 per ounce. Done. Okay, so guys, we've pretty much done all the work on the monthly time frame. We've pretty much done everything on the monthly time frame. Now, once we understand the overall bias, which is clearly bullish, right? When we come on lower time frames, the only thing we're going to be thinking about is buy situations, buy scenarios, buy, because the overall king, now monthly and weekly time frames are king in this game. The overall direction of the market, the monthly and weekly are both telling us this market is bullish. So we're going to come over to smaller time frames to see how we can profit off of this, this overall bullish momentum. Okay, so I'm going to go ahead and delete everything here. I usually don't leave any markings on the monthly time frame. I'm going to come on the weekly time frame just to obviously identify what exactly, just to basically, let me just show my mic closer to me so you guys can hear me properly. Just to basically stress my point a little bit more. So on the weekly time frame, just let me expand this right about here. Now on the weekly time frame, what I can see here is obviously this is the left shoulder, this is the right shoulder, and this is the head. Don't forget, on the weekly time frame is where we come to actually identify chart patterns that have formed in the market in confluence with our already existing trend. I take that again. The chart pattern that we're looking out for has to be in confluence with our already existing trend. If there's a chart pattern forming against us, that also helps us because we know when to get the hell out of this market. But for this situation, this chart pattern is an inverse head and shoulder. It's broken to the upside, and we're looking to make more pips to the upside. So now that's been said, the next thing I want to now come and do is now look for potential levels to draw my support and resistance. Don't forget, guys, the current trend is looking very bullish. Another thing that I always like to do is I always try and look out for reasons as to why this market might not move in my favor. I can see now, this is a mistake a lot of traders make. They always try and analyze against yourself. Okay, once you're done analyzing for yourself, try and again analyze against yourself. Now, I noticed there was a trend line that was forming like so. Okay, now if this market was still trading below this trend line, I would have flagged this as a reason, or rather at least as a concern, and I will simply write this down in my trade plan saying, oh, I have a descending trend line that might affect this trade from going higher. You need to watch out for this, and so on and so forth. But thank goodness this trend line, the market has broken past this trend line. So I do not have any reason as to why this market shouldn't continue going higher. So at the moment, the only thing I'm thinking about is bullish, 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 right? Cool. So now we're going to proceed to drawing some major levels. Now, if you want to understand how I go about drawing my major levels, like I said, I'm going to be leaving I'm going to be suggesting at the end of this video where you should go about drawing how you should go about drawing your major levels. I basically explain everything to you guys in that video, so that video is quite helpful. So if you want to know how I draw my major levels, feel free to check out that video. But for the sake of this video, I'm just going to go ahead and draw my major levels. Okay, just going to go ahead and draw my major levels like so. Instead of stressing myself, I can just go ahead and clone these levels. Perfect. I like it. Looking good already. Yeah. Perfect. Perfect. Yeah. Good. Now that I've been able to draw my levels on the weekly time frame, I'm done with my weekly time frame. I can now go over to my daily time frame. Okay. Just excuse me. So let's switch over to the daily time frame to see what exactly is happening. Now, guys, as you can see, this is very neatly done. Very neatly done. Now, guys, as you can see, the reason why gold has failed to continue moving higher is because we have major resistance. These blue lines represent major levels in the market that I've just drawn so far, and this is the exact reason why gold is unable to move higher. We have hit major resistance, right? Not to say that this market is no longer bullish. This is just to say, just basically to explain why this market has not been able to move higher. So what am I going to do? Very simple. I'm just going to simply, now I can zoom in a little bit small. I can zoom in a little bit more, and just pretty much adjust these levels properly. Right, I've adjusted my levels properly. And now another thing I'm going to come and do is I'm going to look for areas of minor support and resistance. Now this looks pretty minor to me. Why is this minor? I'll explain to you why this is minor to me. This is a minor level because whilst I was trading this market, I can remember how many times this market rejected off of this level, and then when we finally broke it, we broke it, came back, tried to test it, retested it before we blew out to the upside. So this level is a minor level. Now I don't trade off of minor levels. All I do is I just plot them so that I'm aware that they are there, just in case the market is running into these levels. I know to be prepared. Okay, another minor level is here. Ask me why. Because this market, we blew into it, we pulled back, tested it, we tried to make new highs. That happened. When we pull back, we tested it again, tried to push up, pull back, tested it again, and we're currently testing it at the moment. So guys, this is a very strong minor level. Now you're probably asking me, what do we do at this point? Now guys, this is very simple, right? Now you can come and look at the immediate trend. Now I can see already on a daily time frame that we're making higher highs, higher lows, higher highs, higher lows. Take that again. Higher highs, higher lows, higher highs, higher lows, higher highs. And at this moment, this is looking like a higher low. As long as we sustain above here, we're looking like a higher low. Now guys, all I'm going to do is two things, right? Two things are going to happen in this market. It's either we break below here and start bleeding all the way to the downside. Okay, now if that happens, I'm not going to be interested in trading this, because you have to understand that this is a top-down analysis. The monthly is telling me bullish, weekly is telling me that we are bullish, and we have also broken out of a major inverse head and shoulder. I have bullish engulfing monthly candles, two bullish engulfing monthly candles. So you know, everything is telling me bullish, but this guy on a lower time frame is conflicting. It's not exactly conflicting, but it's telling me that it's not sure. So what I'm going to do is, if we drop lower, I will not be interested in selling. Even if I go selling, I'm going to risk a very small portion of my account. But in the event that because right now this market has formed what I like to call a flag pattern. As you can see, this market has pretty much flagged. For those of you guys who do not, you can see how I'm combining different tools together to help me understand what this market is going to do next. Okay, now guys, the only way I'm going to be interested in this market is if we break above this counter trend line, trade here, close above here. The moment that happens, guys, we are gonna come and attempt this blue zone again. The moment we break above this blue zone, guys, we're gonna come and trade at $1,800 per ounce. Literally, I'm expecting to see something like this. Okay, I'm expecting to come and see something like this. Okay, that's exactly what I'm expecting to see from gold at the moment. However, if we break below, I already know where the next level targets are going to be. So even if I wanted to short this market, I know exactly where I should be shorting this market into. First level target will be here, second level target will be here. So guys, you can see this is exactly how you should be doing your top down analysis. I'm also going to try and pop out a trend line somewhere from low to high. Now this trend line is all the way down here. I don't think we might, because of how straight and because of how linear the breakout is, I don't think this market is going to come and trade and touch this trend line before we head higher. But if it does happen when we get to that road, we're going to reanalyze the market. But at the moment, guys, this is exactly how you should be doing your top down analysis. Very simple, very straightforward. Like I keep saying, once this trade is activated, I set my stop losses will come below previous highs. Let me see if I have any Fibonacci to help me pinpoint my overall target. Not my overall target, my first level target. So in order for us to do Fibonacci, I'll take my markets, my Fibonacci from swing low to swing high, which is here. Okay. I can come out and map out my first level, my second level target, which is going to be at that green level there. So guys, if we break out of this counter trend line and we start pushing higher, my first level target is going to be at the bottom of this blue zone here, and my next level target is going to be at this green zone. If we take out this green zone, guys, you know, the market is going to blow all the way to the roof. So you can see how it doesn't take me that long to put together an analysis. This market, once it plays out, I'm going to bank anywhere between 400 to 600 pips without a doubt. Now you can come on your little 1 hour and 4 hour time frames. Gosh, I hate those time frames so much. Now you can come on, like, this is why I don't like trading on lower time frames. All of this is just jargon, like, it's so much stress. So even if I was on a 4 hour, the only thing I'll be looking out for is potential buy setups so that we can blast all the way to the upside. And actually this is too big, so that's why it's looking, this is quite big actually. Let me just reduce this slightly. Okay, cool. Now we can see. I can see clearly now, the rain is gone. So yeah, once we break out of here, we break this level, green target. Once we take our green target, we're going to be trading at $1,800 per ounce. Now guys, if this video has been of absolute help to you, please smash the like button. Don't forget to subscribe. It helps my YouTube algorithm and it basically motivates me to keep on making these fantastic videos for you guys. So hang in there. I'm going to take you over to the whiteboard where I'm going to be wrapping this up properly, and I'm going to be suggesting other videos that will help you learn how to use these individual tools like support and resistance, how to draw counter trend lines, how to identify trend reversals and stuff like that. So I'm going to be speaking about those other videos on the whiteboard, and I'm going to be suggesting them at the end of this video. So do comment if you have any videos that you want me to speak about. If you have rather any topics you want me to speak about that you're struggling with, do shoot me a comment. Please comment, please comment, please comment, and I'll catch you in the next video. So stay tuned while I take you over to the whiteboard. Bye. I can see clearly.